Greetings, Wednesday, September 14th. Guess we're on round 3. I had a couple of requests for some exercise problems from module 3, which I will review later on. We're going to start off with the annual report. We do have a discussion assignment due next Wednesday that goes through your annual reports, the hard copy, something like this that you might have received. So I'm going to ask that you look at that and take that and record data from that. Yes, Brooke.
Okay, so I got mine in the mail, and then it says that one of the ones that I selected is out of stock for General Mills.
Okay.
So I got my other 3 because I did Kellogg, Amazon, Western Union, and then General Mills. And I was like, I got mine in the mail, and I was like, wait, why is it 3? And then there's a sheet on the bottom, and it says that it was.
They're out of stock. It was popular.
Yeah.
That's okay. All you have to do is select one. And
Okay.
I would like you to select a hard copy.
Okay.
If possible, if you want to use your company, I know if you're a government agency or a nonprofit, that doesn't apply. But if you want to analyze your company, even if it's not publicly traded, but you have access to the 10K, or if it is publicly traded, all the better. You're welcome to use your own company that you work at, because you may get to have some more familiarity with them, might give you some more insights, so it might be fairly powerful. So I encourage that, but otherwise, you're going to pick one of your annual reports and you're going to analyze it. You're going to record the page number and some other numbers or some other data or some other information as posted in the discussion item. So greetings, welcome.
I just want to make sure that wasn't an issue or something, because I literally got it and I was like, it said out, or it was like temporarily depleted or whatever. And I was like, okay. They didn't tell me that beforehand. So.
And that's why we order multiples. So
yeah.
If you ordered 1 or 2 and they were out 1 or 2, we may get 0.
Yeah.
They're actually pretty good service and pretty good access. And again, I do that. The hard copy for the final projects, you probably won't be using the hard copies. You might use the same company, you might not, but I want you to have a hard copy in your hands. You know what? I'm going to turn off my my virtual background right now. That is
actually, it's like blocking it or something.
Yeah, I'm going to disable that right now. And because that is actually my office, but when I'm not in my office, sometimes fools the world and says, oh, you must be in your office, but I'm not.
Yellow coach.
Okay, so is that a little better? You can probably see now the annual report. So I've got a snap-on annual report. I'm going to do some walkthroughs and do some data and ask some questions and ask you to grab your annual reports now if you can. So grab your annual report and see if you can take that out, and we're going to just identify some things on here. We're going to do a walkthrough and make sure that we're all on the same page, that you understand where to find things, where to look for things, and you get comfortable with looking at an annual report. I will actually go through the discussion. I'm going to jump over to the discussion page, and we're going to see the, let's see what we got. Share it yet, because I'm going to just go there. If you all want to go on your computers and find the discussion items that are there, you'll see the listing of items. There's probably 3 dozen things I want you to find. Most of them are pretty easy, pretty simple. You find it, you write the page number, you put the description, the number, or the calculation there. We're going to be doing a few of these because I want to do some ratio analysis or ratio calculations. Those will actually merge to a spreadsheet, but I wanted you to get comfortable maneuvering on the 10K. As we have been using Edgar to find 10Ks as well, I would encourage you, once you get to that point, of if you want, you can actually print out or go on screen and have the whole 10K. You can have it presented in front of you. I like the interactive data, and I like downloading the Excel spreadsheet. Just makes life so much easier. You got the numbers. You don't have to retype numbers and transpose numbers and take out your calculator and figure all this good stuff. So being able to read a 10K cover to cover, which I'm going to ask you to do for the final project as well, you can read it straight through, but the actual calculations, the actual decision-making, the implications, those are going to come through you directly as you do analysis. So let me go ahead and jump into our discussion, and I'll show what's on the discussion post. You'll see it if you haven't pulled it up already. I'll share screen. Advance portion screen. Two, there we go. So discussion board. You will see that the fourth discussion post is listed here. Go into it just so we can see it cleaner. Identifying 10K items from your hard copy annual report due 8/21, sorry, due 9/21. So the things we're going to start out with, things like company name. I ask you first to jump to note 1. I'm going to demonstrate that here. So here's my company name. I got Snap-on. I'm going to go over to the notes. The notes are usually in the last third of the annual report. Note 1 is significant because it is where the financial statements start, or I'm sorry, the financial statements end. So you go back, and I'm here, I see note 11, go back a couple more, I see 6, I'll go back a couple more, and I'll get to note 1. Note 1 says something like, for me, summary of accounting policies. I like to fold down the page. I will set the tab on note 1 because immediately prior to note 1, I've got a consolidated statement of cash flow. Right before that, consolidated statement of equity. Right before that, consolidated balance sheet. Right before that, consolidated statement of comprehensive income. And right before that, consolidated statements of earnings, which, as you know by now, is your income statement. Comprehensive income is not the income statement that we look at for revenues and expenses. The reason I go to note 1 first, though, is because in other places in my annual report, there's some similar looking tables. It says right here, supplemental statement of earnings. I don't want supplemental statement of earnings. Consolidating data, non-GAAP supplemental consolidating data. These look like financial statements. Fourth quarter. I don't want fourth quarter. There's a whole bunch of stuff in financial information here that's useful and interesting. Results of operation. Oh, there it is. Net sales, cost of goods sold, gross profit, 2019 versus 2018. But if you recall, there's 3 years of income statement data. This is only showing 2. So that's not the statement of operations that I want to look at. I want to look at the one right before note 1. So that's why we jump to note 1 right away. Can all of you find note 1? Any challenges getting to note 1 and seeing what's there? Then I ask you those 2 interesting things you found in note 1, then we'll go over the title of note 2. So when I go over to note 1, it's got a whole bunch of things about accounting policies. And I'm going to ask you to scan that, skim through that. Note 1 is usually pretty standard in terms of the kind of things that are in there. What I find it interesting, new accounting standards are part of note 1. So accounting policies are there. My note 2 is revenue recognition. And they've got things like revenue disaggregation. They have shares between North America, Europe, and all other where they're doing business. So there's some interesting things, and then a couple of pages of note 2. Heading for the balance sheet could be a statement of financial position. It could say balance sheet. And those are the things I'm going to ask you to type into the comments when you get there, what's there. And if you have a tab down, again, fold down the corner on note 1, I can jump to my major financial statements. Mine's called consolidated balance sheet. All right. Total assets from the balance sheet, total liabilities. You'll see total current liabilities on every balance sheet. Some balance sheets, you'll see total liabilities and some you won't. So you may have to calculate that. Then we'll do a debt to equity ratio. How many years of balance sheet data? Anybody know how many years of balance sheet data are shown on a balance sheet? Any takers? Someone just guess.
Is it 2?
It is 2. We got 2 as a winner. Income statement is 3, balance sheet is 2. Now on the balance sheet itself, I'm looking down here in the equity section of my balance sheet. There's a question, well, how many shares of stock are issued? And I hear it says stock authorized, stock issued. I have Treasury stock, there's an amount here which is negative, which means I bought back the stock. It's owned by the company. I spent cash on it, so it's going to be a reduction of my equity. And it tells me about how much is in treasury stock. So those are some of the questions I'm going to ask you to answer as well. If it has preferred stock, they do not have preferred stock on their balance sheet. Sometimes I see preferred stock with a zero balance because they had it before. And actually, I do see it here, preferred stock authorized, but none outstanding. So they had it here and it is zero.
Wait, you said on the balance sheet, or is that the stockholders' equity?
In the stockholders' equity section of the balance sheet. So if I
Okay.
look at the balance sheet, assets, I don't know if you can see that, liabilities and equity. Right under equity, you've got 2 years of data, but you also have some descriptions in parentheses about authorized, issued. Not all balance sheet will have that, but most should on a printed 10K, printed annual report. Good question, thank you.
Question I have, Dr. Goh.
Yeah.
The companies that you provided, in another class we had, strategic planning, I bit off more than I could chew because I picked a company that has multiple lines of revenue.
Okay.
Now, I'm looking at something like United. They have their holdings in the United Airlines Incorporated.
Sure.
Now, the company I chose is Airmark, and they have 15 different lines of revenue. Is this
Although, if do you have that in your hand right now?
which one?
Aramark.
No, I'm using Ruger right now.
Again, use one you're comfortable with. If it has 10 income sources, it's still going to be one income statement. And they'll have a net sales, total net sales. The same way Costco or Walmart's going to have sales revenue, membership revenue, total revenue. So if they've got 5 lines of business, that's nice. They might have some other things. Usually the income statement are still fairly summary. I will warn you, the banks and the airlines get pretty complex. They don't have a cost of goods sold. They're not selling you airplanes. So right now here, when I get to gross profit, number 16, you may not be able to answer that question because they don't have a cost of goods sold. They may be providing a service. The hotel is normally not selling you rooms. They're renting you rooms. So you may have either distorted picture or not existent, and you may not be able to calculate some of that stuff.
Okay.
Net income as a percent. Does that answer your question? Oh,
Yes, because once again, that was a problem I was having, is that Aramark's selling a service, they're selling a product.
well, that's okay. If they have product sales and service sales, then they'll combine it for total sales. That's great. That's actually not so bad. But some of the things, again, for banks, which a lot of folks are not familiar with financial institutions, how they sell money, and they don't have a cost of goods sold. And they really don't have receivables often. So a lot of companies that are cash companies won't have receivables. So it's some of the things you don't find. And by the way, if I ever asked and it's non-existent, you obviously are not going to get penalized for it, but you'll be aware that why it's non-existent. Auditor's opinion letter. Write out the first sentence, which probably will match everybody in the class. We have examined the financial statements for XYZ Corp over the period and yada, yada. And then is it unqualified or qualified? In our Saturday class, which do we say was better? Unqualified opinion or qualified opinion?
Wasn't it unqualified?
Unqualified, clean opinion, no qualifications. But you'll read through that, and if you see except for, you know it's a qualification. What's the name of the auditor? Chances are it's going to be a big 4 CPA firm. Risk factors. Some people look at it at 10K and say, they're telling me that there's this risk here and what they are. They might be talking about some international risk. They may be talking about climate risk. They may be talking about all kinds of risk, but that's actually mandated. They must report that. What's the cash flow statement called? Are they using sources or uses of funds under operating, investing, financing, cash balances? What are some of the other statements showing? Where do you find cash? Those 2 cash balances. Which list the financial statements? Which one's a period of time? Which one's a point in time? That's more of a review. What's the number entitled the last note to the financial statement? And you look down there. I'm going to look here. Mine was pension stuff to note 12, note 13. of 14, 15, note 19. Okay, my last note is note 19, and it's business segments. We'll be talking more about segments, when you need, what segments are, and when you need to disclose them separately. What segments of the business, and so I'm asking you to find out what the last note is. Take a
What-
gander at it.
I have a question real quick.
Sure.
Sorry. This might be, so whenever you said the last note, so like for my, like if I chose, I was just looking at like my different three that I had. If I chose like say Amazon, would my last note be like, I'm pretty sure it says exhibits, financial statement schedules? That
Okay,
you want, or would it be there's another one that's like 14, I think it's principal account fees and services. So like, what would you,
okay.
sorry, that might be.
Oh, no, great question.
Okay.
It will usually say note X. So mine said note 18, now it says note 19. And it has other stuff after note 19, maybe exhibits, but I don't care what the exhibits are. I just want to know what the last note number is. And then I have signatures. And then I have consent of independent registered public accounting firm. So I have other exhibits, exhibit 31-.2, exhibit 32.2. It doesn't matter what the exhibits are. I just want to know what the last note to the financial statements are. And what
Okay,
the-
mine are like, that's why, like I said, this might be dumb. That's why whenever I'm looking at it, because obviously you've looked at a lot of these before, so it's just a little confusing to me because like whenever I'm looking at the Amazon one, I don't see where like at the like notes and stuff. You know what I'm saying? Like,
You should, it may not say note, but it'll start number one. So
that's
in this-
okay. So that's what I was. Mine is by Roman numerals, but that's what like my last one. That's what I was asking. Some okay. I think I was. That's what I was asking.
All right,
Or that was my last
Okay,
Roman.
can you find the balance sheet?
Yeah, sorry.
Oh, don't
I
be
was
hard.
looking at Kellogg, then I was looking at Amazon.
Let's go to Amazon, because Amazon's a good company to look at. So let's go to Amazon. And if you find the balance sheet, income statement, cash flow statement, stockholders equity statement.
I was
right?
on the income statement and then I lost it. So sorry, I didn't mean to like stop your.
No, you're doing, yeah, that's fine. That's.
I just didn't want to go. I want to do the discussion board right, so that's why I'm asking
That's why
now.
we're here. I'm glad you're here and I'm glad you're asking something.
Okay. Where would it be towards?
Towards the end, like the last third.
Towards the end. Okay.
Yeah,
I think
if
it's
you
on
start- if you
page
start at the beginning,
39.
we're gonna be here a long time.
30. Okay. I'm on okay, yeah, consolidated balance sheets. Got it. Thank
Okay.
you. Sorry.
No, keep going. Now go past the financial statements. And what's the
Okay.
first note? Is it a Roman numeral one?
Okay, okay, now I got it. Okay, so it says notes to consolidated okay, got it.
And does it say note one on it or just have a number?
Yeah,
down?
so my first note one, it says description of business, accounting policies, and supplemental disclosures.
Perfect. Fold down the tab on the corner.
Okay.
Right? That'll be, so you don't have to thumb through it every time to find it.
Yeah, I was trying to like find it before I asked that, and then all of a sudden I was like, okay, I can't.
Can't find it. And that's okay. You're right. You haven't looked at these before. It's not going to be familiar. It's not second nature yet, but it is there. And it's not, once you get the hang of it, it's not hard to find, but it takes practice. So now that you found that, you're on note one.
Mhm.
Now you can go back and say, oh, there's note two, there's note three. And now you can see which notes, where the notes end.
Okay,
You don't need the exhibits, but I want you to see the notes. Because the
Yeah.
notes are part of the financial statements. Those are required by GAAP as well. They're saying, the numbers are nice. As a matter of fact, they're crucial, but numbers alone don't tell the story. I need some description where those numbers came from, what they're based on. And that's why the notes to financial statements are integral to the annual report. Does that make sense?
yeah, I think my last one is note 10. It says segment information. Does that sound right?
Yep, you and I have both, that's the last set for both of us.
Okay, that's what I thought, but I was okay.
Cool.
Okay,
All
thank you.
Oh, no, thank you for asking. Great question. What are the names and titles of the officers of the corporation certifying the financial statements? Sarbanes-Oxley is requiring a couple of folks to sign off on it. So who are they? Give me the names and titles. By the way, in each one of these, I do want a page number as well. So make sure you got a page reference and the answer to the question.
For
Uh,
each, for each question?
For each question, correct.
Okay.
Thank you. What comments does the 10K make about legal proceedings? If there's some pending cases, go ahead and list them. Find a line graph that looked interesting, describe it. Does the company specifically say anything about the competition? There's a separate section usually called competition. Find it, read it, and see if there's anything indicated. And as you examine the full report, you'll be coming through and saying, this is confusing as heck, or actually, this isn't so bad. This is kind of interesting. Well, I'm asking you for two other things that also kind of looked interesting or surprised you as you were looking through. So that's the assignment. It's not heavily complex. It is a little bit of digging. It is a little bit of finding information and scoping things out so that you will, again, hopefully be a little more comfortable in an annual report, what it is, finding statements, making sense of the statements. How we feeling about that? I get one thumbs up.
A lot
Anybody
better.
else? Okay. All right, we get a couple of thumbs up. Good. Any other questions? Brooke, thank you for asking because by the way, I'm sure when questions come up, you're not the only one. You're just the only one brave enough to ask.
Yeah, well, I was like, I really was looking through the book and then I was like, I just didn't want to get on the discussion board, like, a couple days from now and then be like, you just went through the questions and I was like, I don't know what he was talking about. So.
Nope, I'm glad you asked, and it's in the recording too, so it is accessible and available. So appreciate that. The content here, part of the reason I wanted you to get hard copies is these are going to be collector's items. They're going to stop printing these things eventually. They'll be online, they'll be virtual, they'll be PDFs or whatever the future equivalent. They'll be under XBRL, which is another language for reading financials, but they will not be hard copy printouts eventually. Right now, they still are. You can be able to tell your grandchildren, I actually read these things. I was talking to my class today. I asked them when they got their first cell phone as a survey question. So we're talking about technology. And I said, I don't know when I got my first cell, but I know when I got my first car phone. So that was and it was interesting. I had some students 6 and 7 years old getting cell phones, which I thought was fascinating. But that's okay. Anyways, any other questions when it comes to talking about annual reports and content? You'll get a good feel for it. Once you go through that discussion, I think you'll have a pretty good handle on the organization, finding things. And again, I want you to do it physically, tactily, and feel it so that when you actually get a virtual 10K and you're thumbing through it, what's nice about the virtual is you can actually search for a keyword or a key term. You want to go risk, you want to go competitor, you want to go audit, you can search for those terms and it's going to jump to those pages when it's online. It's kind of hard in here saying, okay, auditor's report, where is it? Audit. Well, you got to scan it and figure it out. So that's what's going on with that. Okay. That covers the annual report that we are going to be getting a deeper dive on. And again, there'll be some more discussion points to analyze the numbers. What's going to be happening is you're really going to be looking at the financial statements to do more analysis, but you're also going to be reading the annual report. A lot of good information. And I will share, like this, some annual reports are just paper 10Ks on thin paper. Like Amazon is probably a thin paper one, correct? Brooke, is that just a little paper?
It feels like I'm trying to picture. It feels like pages of like a coloring book. That's what it reminded me of. Like an old coloring book.
Because this one not only has the 10K report, but it also has about 5 pages of glossies in front that are nice high gloss, high quality charts showing off. These are more summary things. This is not the information you're going to grab. You're going to grab from the 10K, which has a title page and describes who they are and some of the background, their year ends and such. And then there's a table of contents in the front. That table of contents might be helpful when you say, well, where are the notes to financial statements? Oh, there we go. I got notes. Okay. And I can find it going down and accessing it as I want to find things. So the table of contents doesn't hurt either. Not all of them seem to have a table of contents, which I was surprised. But and they're all They are varied depending on company. Not everything is identical. Usually the first note is identical in terms of the title, but everybody has different policies. Next couple of notes, they'll have a little different wording. Some will be consistent. But when you want to see how they do with their inventory or fixed assets or summary of receivables, you got to go in the notes. When you want to go in and see bond issues and details of when they got to pay them back, you got to go to the notes. The equity is nice because they sometimes show number of shares authorized, number of shares issued, and we'll do a deeper dive as we get into stockholders' equity. We'll be talking about that. Cool stuff, good stuff. I hope you enjoy. All right, so that goes for our next discussion due next Wednesday on the annual report. Any particular questions on module 3 that you want to talk about? I mean, I had specific question 4 on module 3 was actually accomplished on Monday. So if you want to review that, if you haven't already, you're welcome to take a look at that. I had some emails saying, can we look at questions 7 and 9, which I will do tonight. But I want to open the floor up as well. If there are other questions, other concerns, anything on your mind as you've been doing the readings, doing the homework, running through the quizzes, making sense of things.
I do have a question. I just got to figure out where I wrote it down at and all these.
That's fine. That's why I paused. Anybody else as well? Please let me know. How many are relatively satisfied with how they're doing on their quizzes? Yeah, you can give me a thumbs up, thumbs down, or across. I got it down, up, up, trying to get up. I get it. All right. So we're overall, I will say the last quiz overall, I was fairly impressed with by most, not everybody. Obviously, not everyone does wonderfully, but I think folks are catching on, making sense of things. And yes, there were some challenged folks that didn't do so well. That's okay too. I do post the averages. I do post the actual distribution as well on ABC. Do you find that helpful? Do you find that of interest to you, or do you care? Give me a thumbs up. Yeah, I like to see it. Thumbs down. I don't want to see it. Everybody gets to vote. Yes, I want to see it. No, or no, I don't care.
I'll be completely honest with you. I'm not getting that grade of the average.
Okay, thank you for the honesty. From what I'm seeing, I'm not getting a lot of folks saying it's interesting. So I think I'll stop that, because if you're telling me I don't really care or I don't want it, obviously this is not the whole class, but the sense I'm getting is, you know what, maybe we don't need to post that. If anybody wants to individually go through not this past Monday, but the previous Monday, we went through the previous quiz question by question. Yeah, that was on the Monday session. So if you want to review, I have a recording of that, the first quiz, but if you want to review all questions or just 1 or 2 questions, reach out to me and I'll walk through them with you. So please don't feel like you're stuck. I gotta listen to the whole video or fast forward to my point. Come on Monday, we can talk about them, or another office hours or evenings or weekends. Just let me know when's convenient for you. We'll make it work. All right. Polk, did you find your question yet?
It's something we've covered before, and it was mostly on the homework that I was trying to figure out, but you said
Is it
you're
module 2 or module 3 homework?
module 3.
Okay.
But you
Let's
said
we'll go through some of the exercises. Like I say, 4 we went through. On Monday, we had a pretty good discussion about T accounts. And that's one description that's going to be helpful to picture this stuff. And let me do a mini lecture on that first before I'm going to do questions 9 and 7 tonight. We'll do question 9 first, then we'll do question 7. 9's a little simpler, a little bit reduced. So let me go ahead and I'm going to go into the whiteboard and we're going to go and take a look at what these T accounts mean. So when we are doing a T account, probably sick or tired of this by now. And the only reason it's called a T account because that thing looks like a T. But each T account I might have things like accounts receivable. I might have things like sales. I might have things like cash. I might have things like accounts payable. What you've been hearing, and it's the right thing to talk about, is going through, and for each of these accounts, we've got that layout that we start with. We start with cash, then we go to non-cash assets, then we go with liabilities, then we go with equity. There are two kinds of equity. It's contributed capital. We have, and let's stretch this out a little bit. And then we have capital from operations, operating capital, or what it is. Then we have revenue, expenses, and net income. And you've been seeing every line item. On every line item we go through, we say, oh, I've got numbers. Let's see if I get cash. Let's get an initial investment, $100,000. And then I'm going to get contributed capital, $100,000. And then I might have sales. So I might have sales revenue. I get cash. Oh, I give cash of $5,000. And I go over here and I say, got revenue of 5,000. And I have net income of 5,000. I go back here and contributed capital from operations of 5,000, which is my retained earnings going up. And so life's good, I'm in balance. And then you say, well, out of that 5,000 in sales, that was at retail. How about my cost of goods sold? Well, my cost of goods sold is at cost, not selling price. Because if I sold at my cost, I wouldn't make any money, right? So let's say I sold some inventory. And so I go over here and I say, I got $3,000 minus 3K of inventory. That's my non-cash asset. And then I have expenses, cost of goods sold or cost of product sold, 3K, which is a positive. My net income is going to be a negative 3K. I go back here from operations, my retained earnings dropped my balance sheet right away. I lost $3,000. I had a reduction of $3,000 from my retained earnings right away. So here's what my retail, my selling stuff is. Here's what my costs were. And the whole point of this is looking at and saying, that's great. I'm going to do one more transaction here. We'll do a service sale, but instead of cash, I'm going to have receivables to the tune of $10,000. I go here, I'm going to go over to revenue. Okay. Have net income impact of 10K. Go back over to my retained earnings. I'm going to effect of 10K. So this should be pretty familiar to all concerned. Well, let's go one step further. I'm going to go in and I've got equity. I'm going to go here, common stock, and additional paid-in capital together. So one more T account. I get payables, receivables, cash. I need cost of goods sold. And if I look at this picture, I can go in and say my first transaction, I get $100,000 in cash. And on the other side of that, I've got $100,000 in contributed capital. We're using T accounts, which actually, and then I go over to my sales of $5,000. Sales are on the right. That's why I tried in income statement. Sales revenue on the right, expenses on the left. I got 5K of revenue and I get another 5K of cash. And then I've got my cost of goods sold to the tune of, and I do need to have an inventory. Do I have an inventory account? Let me put an inventory account up there. T account. So if I have my cost of goods sold, I'm going to left my cost of goods sold to the tune of 3K. I'm going to right my inventory to the tune of 3K. Use inventory, cost of goods sold. And then I have another $10,000 in sales revenue. I have accounts receivable. Any questions on those T accounts and those transactions? Do those make sense so far? Now, the reason I put this out there is because we want to see inventory might have a beginning balance, and I'm going to start making up some numbers here. Maybe my inventory started out at 15K. And maybe my receivable, again, these are going to make up, I don't know if they'll end up balancing when all is said and done. My sales is what my sales is. My accounts receivable might have started out at 50K. And accounts payable might have started out beginning balance of 25K. And my cash might have started out at 200K. So it's important to understand that we've got beginning balances, then we have transactions. And I'm going to write down one more transaction here. I want to go through and let's go into do one more transaction down here. I'm going to pay off. I'm sorry, I'm going to receive some of the cash that's owed me. So if I have, let's say we got, out of all the receivables, we have $5,000 that we got paid. So my cash changes. And then what's the other side that's going to change? My sales aren't going to change, but my non-cash asset of receivables is going to go down. I have one asset up, one asset down, net impact of 0. Let me draw that in up here. I've got receivables down 5K, got cash up another 5K. I should be putting that in red, but that's okay. You get the idea. So let's look at the receivables here. I start with a beginning balance. I add to that my sales. I deduct from that cash receipts. And I'm going to have an ending balance. What's my ending balance here? Well, I've got 50 beginning balance plus 10 is 60, minus 5 is 55. I look at my cash. I haven't paid any payables yet. So I'm in pretty good shape. I got 200, 300, I got $310,000 in cash. So you'll notice when I got paid this $5,000, it did not affect my sales, it just affected my receivables. I will share that your purchases, when you actually buy things, purchases get into payables and cost of goods sold. The other side of this cost of goods sold transaction, if I bought inventory of $50,000 and accounts payable $50,000, and then I used up $20,000 and I put it in cost of goods sold, I have 20,000 out of inventory and 20,000 in cost of goods sold. So all I'm saying is these T accounts, the relationships they show, my accounts payable is going to show me my beginning balance. It's also going to show me my purchases. The other side, I'm going to reduce my accounts payable with cash disbursements when I pay things. And then I'm going to have my ending balance. So the key here is I can give you 3 out of these 4 numbers, and you should be able to calculate the 4th. If I give you so my beginning balance plus purchases minus disbursements equals ending balance. My beginning balance plus sales or receivables minus cash receipts equals my ending balance. You should be able to understand by getting 3 of these numbers, you can get the 4th. And I'll do a very quick algebraic notation. I'll call that A, I'll call that B, I'll call that C, I'll call that D. We went through this on Monday. A plus B minus C equals D. You can solve for A, you can solve for B, you can solve for C, you can solve for D. It's basic algebra. So this is how those line items relate, but this is also how the T accounts relate. And that's going to be pretty important to go through when we're solving module 3 questions and problems. Quick show of hands. How are we doing? Is this over the head? Is this kind of on track? Is this kind of fuzzy? Or I'm going to have to look at this video 17 times.
It works. I understand it. My biggest question that I had was, oh no, I'll be giving the quiz away. I'll ask that on next week then. Yeah.
I get it. Yeah, I mean, I want to go through this before the quiz, and if the strategy is come to the session before the quiz, by all means, come on down. We got the quiz due tomorrow, Thursdays. So let me go through exercise module 3, problem 9, and let's see if we can do that together. And okay, let me ask the question: is that what you'd like to see? Is there anything else you'd like to see? All right, let me go ahead. And,
So when we are looking at like the prepaid expense, and we'll use an airline, for instance, we're going to pay the airline $1,000 for a plane ticket. So she's a whole number $1,000. That's going to go under our non-cash assets.
you bet.
And then after it goes on our non-cash assets, once we actually board the plane and that plane takes off, then so the airline's going to record that as revenue, net income, and then
Okay, I'm glad you asked that question, because we're going to look at it from the airline perspective, and we're going to look at it from the customer perspective.
because the biggest problem I'm having with the homework is trying to understand who is doing what. And it's saying a service was applied, but who provided dang on service? Did we provide it, or did they provide a service for us? Like that's
Is
and
it
it's
unearned revenue or is it prepaid expense? The same question, is it a payable or is it a receivable?
that's where once you understand who gave what service, then you can go. Like one of the questions was XYZ cleaning company spent $3,300, paid $1,500. So therefore we know that we have a liability because it's us. We bought that equipment for our company to do business. I got that. Or it's not expense, it's a liability. We owe $1,500 to whatever company we purchased. But when XYZ company did a service or has given a service and has not paid or sent out a bill, that's where I'm getting twisted up, because it's only saying we or they. It's not exactly saying who we're expressing.
Let me back up then. All right, so let's do a word problem. ABC Corp buys from XYZ Corp. If I buy, let's say now be selfish, put yourself in the picture. If you're the buyer, are you paying money?
If I'm a buyer, yeah, I'm giving money.
You're gonna give money. Okay, so you're
Well, I'm
buying.
ABC Corp.
It's either cash is going down or you got a payable, you owe the money somehow. So
Mhm.
that's where payables come in. The seller either has revenue in cash or receivables. So now, let's say ABC, you buy plane tickets. What two places are going to be affected? If I was looking at my chart of accounts, I'm buying plane tickets. I said, I put it on my credit card, which is same as cash. And is this unearned revenue or prepaid expense?
That's a prepaid expense because I haven't got on the plane yet.
Both of those are asset items, right?
Yes.
Okay, well, let's look at XYZ. Is selling plane tickets. Thank you, American or United. They're either going to get
Cash.
cash.
That's then going to go into revenue, which then is going to go into net income, and then that's going to
Okay, if the plane hasn't taken off, what kind of revenue is this?
unearned revenue.
Unearned. That's the liability, right?
Yes.
And again, cash could be, I'll put it or AR, they're gonna get cash, it's an airline. But you can say, I owe you the money. But we're gonna get cash and unearned revenue. So we've got a liability going up and we got cash going up. Here we have an asset going down and an asset going up. This is how we stay in balance, right?
Mm-hmm.
So if you start saying you got cash, you got non-cash, asset, you've got, for lack of valve, I'm gonna put liabilities, not gonna be separate here. I like the titles. Liabilities. And we have contributed capital, equity. Revenue. Expense. And then we have. So if we're trying to analyze what happens, we can go through and say, well, did I get cash or did I pay cash? Well, if I'm ABC Corp, I'm paying cash. So I've got my negative. I'll make up a number here, $200. And I've got my positive 200 prepaid expense. At the end of the month or when the plane flies, I will take this 200 and put it down to actual expense. So my adjusting journal entry is going to be something like this. It's not cash. It's one balance sheet account, one income statement account. I've got expense of 200. I've got net income of negative 200. I go back here, contributed capital, retained earnings is down 200. That make sense? That's my adjusting entry. Call it AJE. So that's what's going on. On the other hand, if I'm XYZ, if I'm the airline, I'm going to receive $200. And I'm going to have a liability or an obligation of 200. And when the plane takes off and lands, I'm going to eliminate that obligation, the unearned revenue. And then I'm going to put it over here under actual revenue or positive net income of 200. My contributed capital is going to adjust by 200. So my Liabilities go down, my equity goes up, it's a net of zero. That's how the picture rolls. Making sense? How's that feeling? You poke, you're on you.
That works. I mean, after reading the question about 5 times, it finally kind of clicked that we are company XYZ. But when you're taking the quiz and it's just go, 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 and you got 30 minutes and you're trying to figure out, for me, it's always about it's a reading game. It's never the.
I'll tell you, you probably heard in marketing, it takes 5 to 8 exposures to see something. Okay, you see it in social media, you see it in an ad on a TV or in a YouTube video, you see it on a billboard, you walk down an aisle in the grocery store, you're gonna see that stuff. And what's gonna happen? It takes 5 to 8 times to register. I was reading recently, it takes now 12 to 16 times to register. Why am I saying that? Because when you read this stuff, unless you internalize it, the first time you read it in the PowerPoint, first time you see it or hear it in a video, first time you do it in a reading, first time you try it in an exercise, the first time you read it in the summary in the textbook or the intro in the textbook. Okay, we're up to 6, 7 times now. It's still going to take more practice. Another homework problem, another homework, and finally, 14 times later, you take the quiz and you say, oh, I got it. If you're only at number 6, you're going to be scrambling saying, am I the customer? Am I buying, selling, or eating or drinking? I don't know. Maybe I should be. You get the idea of trying to figure out, what am I doing? It takes practice. And that's why we're doing review sessions tonight, Wednesdays. That's why we have Mondays. That's why if you need extra help, we're here to get together. Is that making sense? It takes practice. Like you say, we're going to find all that time for practice. Well, that's why you're in the MBA. Congratulations. Okay, let's go. I think we'll have time for question 9 first, and then I'll hang on if people want to do question 7. Or if we don't get to all the questions tonight, I'll happy to go one-on-one at the time. So let me go share screen, and let's go over to screen, and we'll go to module homework. Let's go to questions. Computer's going as fast as it can, I think. Okay. So you cannot add a question. I don't want to add, I want to go to questions. Let's go down to, we have question 9. Oh, is that? Actually, this is, I think this is the quiz, isn't it? I'm sorry. That was my fault. Oh, my Lord. You get the benefit of being here. No, that's the homework. There's the homework. Come on. Module 3, do that. Yeah. Try it again. That was the right place. That was the right time. Okay. So we're doing 15:9. Yep. Match secret, just in count data. So let's go into. Okay, yep, that's the question. Okay, this is going through these accounts and saying what shows up in the balance sheet, what shows up in the income statement. Okay. And we're going to go through and figure out each line item, what the transaction looks like. So let's do a quick round table. I'm gonna ask you all to come off of mute. So if you don't mind, please do come off of mute so I can hear you, see you, and get a chance to figure out what you're saying. Okay. So if I'm looking at this, it said during fiscal year 2016, so fiscal year end 2016, Costco collected 2.739 million, also known as 2.7 billion in cash. For membership fees, use the financial effects template to record the cash collected. And that for membership fees. So line item A. Where do we put this 2739? Two places.
Cash.
You got cash? You sure?
They collect for membership fees. So wouldn't member.
So just say yes. I'm sure.
Yes, it's cash. Yes.
Okay, good. Good answer. By the way, I want you to, I want that confidence. You're an MBA, you're gonna walk away confident. But I will, by the way, when I ask you, are you sure? I'm not testing you to see if, you got it wrong. I'm saying, are you sure? So we'll go with that. Now, this other 2739, where is that gonna go? And there's two answers that you might want to propose.
And wouldn't it go in the revenue?
During fiscal, they collected cash from membership fees. Use a financial effect template, collect membership fees.
Would it go anywhere in capital or no?
Yep, that's one place you might want to put it. You say, oh, there's my revenue. I got 2.79 million revenue in revenues. I got 2.7 billion in net income. I've got 2.7 in earned capital. I got to put it in all three places if I do that. The problem is, what happens if you get your membership and tomorrow you cancel it? In the theater, because they say money back, you don't want it, we'll give you money back. So where should it really be?
Non-cash?
What's that? Well, I can't double my assets. I got to balance it. I either have a non-cash asset going down, a liability going up, contributed capital going up, or earned capital going up. Where does a prepayment go? Like when we did the airline. The airline says, oh, I got money, thank you. The plane hasn't taken off yet. You haven't used the ticket yet.
That's under a liability.
That's under liability. What's that liability called?
Is it unearned revenue?
Unearned revenue. Ding, ding, ding. Good answer.
Now
So
see
we're
this.
looking at unearned revenue and we're looking at cash. Am I in balance? Do my assets equal my liabilities plus equity?
Yes.
You bet.
But now here's the question, because I'm lost. It says during the fiscal year 2016. I see 2016 up here, so that's telling me that we've already closed out 2016. So you don't get your money back for
During fiscal
2016.
collected in cash for membership fees.
Yeah, it's 2016. They're now going into 2017.
Oh, let me see. Membership warehouse selling food, good household. Oh, that's a good point. The case can be made. As probably 60 members, like fiscal year information. Okay, this was, you know what? Maybe let's try that.
Oh, it's going to be wrong. I can tell you that. I've already tried it.
Oh, okay. Well, I mean, they collect fees. They have to do adjusting journal entries for those fees.
Gotcha.
So I can understand if you put revenue here, net income there, earned capital there, but it's a prepayment. Some were January, some were March, some were December, all for the next 12 months. So they're going to have to make an adjusting journal entry. That we haven't got there yet. So we have that liability. So that's where I do want to put it. That's where I can see where the confusion would be. Well, let's check it, by the way. Let me see if they like that. Right. Yep, so far that's they like that. Right. They don't like my other ones because they didn't put any numbers there. Do that. Yeah, I can't undo it once it's undone. Well, that's a good check to see. Oh, I need to know where I can know where I need to put my stuff now, right? But let's go down here. All right, we merchandise cost of goods sold, 102,901. Record the transaction in the financial statement effect template. So they have merchandise cost of goods sold. So where's cost of goods sold show up?
Wouldn't that be your negative cash assets?
Would it be negative? Did we write a check for this?
No, negative non-cash assets.
Negative non-cash asset. What negative non-cash asset would that be?
Your cost of goods would be your inventory, wouldn't it?
Okay, the non-cash asset, I've got inventory. I like that. So how much do we put there?
102,901.
102,901. Do
Yeah,
that.
have fun with that zero game.
All right. Now, I've got three items. The cost of goods sold shows up over here under expenses, right?
That'll be under expenses as a positive, but then there'll
As a
be
positive.
reduction in your net and in your earned capital.
Is that a positive in net income or negative?
Those are negatives.
Again, it. A negative. Check. Didn't like that. Because I have an extra number here. I didn't get that number down right. Negative 102 90.
And the other one should be negative under
Set.
non-cash assets should be negative as well.
Non-cash assets should be negative as well. Good catch. Okay. So you got this. Let's just check that and see if that does any better. It liked a lot better, didn't it? Now determine the value of merchandise that Costco purchased during 2016. Remember that T account analysis we went through? We're going to do that again. So I'm going to go and I'm going to annotate on this screen right here. And I'm going to go through, create a T account on the screen. And the question it's asking is determine the value of merchandise purchased. Do we purchase our merchandise through payables or receivables?
Payables.
Accounts payable. Excellent answer. So I'm going to go ahead and we're going to do a T account for accounts payable. So what's my beginning balance in accounts payable? Do I know?
Your beginning was the deferred membership.
Nope, I don't have accounts payable here.
You don't have one. No.
Okay, so let's go through and let's see, we're trying to determine the value of merchandise Costco purchased during 2016. So we're looking for the purchases here. And we're going to have payments.
So what you take the 102?
Oops. It's gonna be over here. We have purchases. Okay, so we have deferred membership income liability. We have merchandise inventory. Well, let's look at inventory because we're given inventory. Let's clear this. Let's go into inventory. Let's just go because we could have, if we had payables data, we don't seem to have payables data, do we? Let's go to inventory data. And what happens? We have on our inventory account,
Your opening is 8908.
the beginning inventory. We got ending inventory. And we have purchases and sales. Where do purchases go? On the left side or right side? So does a purchase increase our inventory or decrease our inventory?
It increases, so it's a credit on the right.
We increase our inventory with a purchase. Brooke, do you agree? Just asking. Leah, Jonathan,
Yeah,
Our
it
per-
would increase.
okay, and where do increases to inventory go, on the left or right?
The left.
Okay, so Polk said right, Leah said left. Any other votes? When we buy inventory, okay, we're starting with an inventory amount here. We got $100,000 worth of stuff on the shelf. At the end of the month, we got $150,000 worth on the shelf. What happens here? If we buy inventory, do we left it or right it? I've got a one vote for each. Somebody want to be a tiebreaker? Please. Shaquana? Lee? Come on out. You guys still there? Or did I freeze? Nope, I saw Brooks' head move, so we didn't freeze. Come on, guys. Okay, let me try the other question. Does my inventory go up or down when I sell stuff?
Down.
So if I start with beginning inventory of 100 units and I sell 100 units, what do? My inventory goes down? Do I left it or right it?
You debited.
My sales are going to be over here. Or better yet, I'm going to put my cost,
Increase.
I'm going to put my cost of goods sold. I'm going to put my purchases here. So left was a good answer. Here we go. I started with some stuff. I bought some more stuff. I sold some stuff. I'm left with ending inventory. So let's go ahead and highlight that. I'm going to actually code that in blue. Have A. A plus my purchases minus my cost of goods sold equals my ending inventory. So if I want to go through and do my algebra, A plus B minus C equals D. And what do we look to solve for here? Determine the value of the merchandise purchased during. So we're looking at B. So what's the formula for B? B equals D minus A plus C. And that's my algebra, just to juggle things. So I'm solving for purchases. I know my beginning inventory is right here. Is it 8908? Yep, 8908. I've got my ending 8969. So I've got 8908 here. Got 8969 here. And we determine our cost of goods sold was what?
102.
102901. So if we can work this through, can someone take 8969 minus 8908 plus 102901 for me and give me an answer, please? D minus A plus C. D minus A plus C.
What is it? 102, 9901, you said? Minus.
I had 8969 minus 102 minus 8908 plus 102901.
102,962.
Is that the vote?
Oh, that's what I did D minus A plus C.
D minus A plus C, that sounds about right.
Yeah.
Let's try that. So if it works. All right, stop the annotation. Oh, 2,916. The other
No,
side of that. What's that?
Should be 102,962, right?
Yeah, I had 102,962.
962. Okay.
Yeah, 102,962.
Yep, I'm sorry. Can y'all hear me?
Yes, I can.
I've been having problems with my microphone. I'm sorry. I just had to shut it off and bring it back up. So I apologize. Yeah, I put it in the chat. I put cost of goods plus the 2016 inventory minus 2015 inventory, which I think is still algebraically the way you wrote it.
It is.
Okay.
You got 102,962 as well?
Yes, sir. You got 61 difference between 16 and 15. So just add the 61 to the 102,901.
Good job. Let's see. There we go. Good answer. So again, the inventory, the accounts payable, the accounts receivable, T accounts, we need to be able to visualize. We need to get comfortable with understanding and seeing the big picture. How's it feeling? Are we making sense?
Yeah, I
Okay.
like the breakdown, how you did like your formula with the letters, but like it helps.
Good. Okay. Yep, it's like I say, 4-function math, and we didn't even do 2 of those functions. We just added subtracting, right? So we're good. All right, I'll hang on and do question 7 if you like. I mean, we're past the hour, but I'll hang on and I'm here as long as you need. I usually say before midnight, we're good. But I don't think you want to stay till midnight. But if you want to, company's good. You can grab dinner and bring it to the screen.
Thank you.
You're welcome. Would you like to go through question 7 while we're here?
Sure, was a little more reinforcement.
Okay, sure. We'll do more reinforcement. Good. Again, don't feel obligated like you're stuck here. But let's go back and take a look. And yep, thank you. You got the formula in there, Lee. I see that. Excellent. All right, so let's go back in and let's go take a look at question 7. I'm going to go back and share the screen again. Portion of screen. Go through and see if I can close this window. Let's go to question 7. And adjustments. So here's a whole bunch of transactions, A through G. We actually did some of this last week too. If you recall, there was a question to that effect. So let's go down through each line item. And this time I'm going to ask for help. So we know this is going in at least 2 places. For each of the following situations, prepare the necessary accounting adjustments to the financial statement. So these are adjusting journal entries. Adjusting journal entries meaning we're going in and we're saying, oh, you know what? We need to go in and there were, who remembers the two major rules? 2 rules of adjusting entry. One is never which account?
Never cash.
Never cash. And the other rule is 1 and 1. What type of account and what type of account? 1 balance sheet account and 1 what?
Income statement.
Income statement. Them's the rules. And if it's cash, it's not an adjustment, it's a transaction. If you pay a bill, 1 asset up, 1 asset down, and that's not adjusting entry, that's a transaction. Or if you exchange inventory for equipment. Here, I'll give you some inventory, you give me some equipment. That's not an adjustment, that's a transaction. Here's some inventory, my inventory goes down. Oh, I got the equipment, my equipment goes up. An adjusting entry is moving things around, our unearned revenue to earned revenue. Our prepaid expense to actual expense. We're estimating interest, we're estimating our wages, we're estimating things that we didn't get a bill for. My employees don't give me a bill, but I have a pretty good idea at year end that I owe them some money. So I'm going to put a payable, wages payable, and a wage expense. I might have a 90-day note starting December 1st. On December 31st, I know I owe 1 month's interest. Those other 2 months, I'm not worried about right now, but I got to book a month's worth of interest, and I'm not getting a bill for that note payable. So let's go ahead and go through these. Depreciation. I'm moving from my equipment down to my depreciation expense. Accumulated depreciation, which is a contra asset, which offsets the asset down to my depreciation expense. So let's take a look. Unrecorded depreciation equipment 2440. So I'm gonna do a round table here. So I'm gonna look for some help. There's 3 of you left, I think. Just see. Yep, there's 3 of you left. So I admire your persistence I'm glad you're still here. I'm gonna put you on the spot, though. Help me out. I've got unrecorded depreciation of 2440. Where, what's changing? Leah, you want to take a shot at something that's changing on here?
Non-cash assets go down by 2,440.
Excellent. Non-cash assets are going down by 2440. Do you know which one is, what it's called? It's not the asset itself, it's the accumulated depreciation. That's the contra asset. That will give you the net of net assets when you're down. So, oh, I forgot the negative sign. Negative 2440. So my non-cash assets are going down. What else is happening? We have, okay, here's the rules. No cash, not capping the cash. One balance sheet, one income statement. Somebody else want to give me the income, where on the income statement it's showing revenues or expenses?
It would be expenses,
You bet, depreciation expense. Good choice.
but it would just be 2440, not negative. Of
Could be
course.
positive because my net income would now be negative.
Negative, yes.
And that means my contributed capital or earned capital. Negative 2440.
It would have to be, wait, wouldn't it be contributed?
Well, is it contributed by owners and investors or is it earned from operations?
Okay, well, it's depreciation. Yeah, okay. I see what you mean.
It's operations, you bet. So negative 24. All right. So we'll go down there, double check to make sure it's right. Looks like a good answer. Okay. How about supplies? All right, we're gonna play with this because we know a beginning balance. We're gonna use a T account. Supplies available at the end of 4,400. At the beginning, they start 11,960. So let's draw that T account out and make sense of this. So I'm going to draw my T account. And my T account's going to say, I've got supplies. I've got a beginning balance. What's my beginning balance?
11,960.
11,960. What's my ending balance?
4,400.
4,400. How much okay, so if I buy supplies, it ups my supplies. If I use up supplies, that's my supplies expense. How much in supplies expense am I going to have? Someone want to do the math?
Should be beginning minus ending.
7560 sound right?
So 600. So 75, yep, 7560.
So that's the amount I need to adjust my supplies. I know what I started with. I know what I ended with. Someone went in the supplies closet and said, oh, let me count what's on the shelf. Oh, I've got 4,400 stuff on there. How much did I buy? How much did I have? 11,960. Cool. I must have used up the difference, 7560 in between. So where do I put the 7560? Is it a negative or a positive non-cash asset?
That'd be a negative.
Negative.
Negative, we used it up. So let's go ahead and put that in. Negative 7560. And the X is 0. And where's the other side of this going?
That'd be an expense.
One balance sheet account, one income statement account. Expense,
An expense of 7,560.
supplies expense, you bet.
It's negative net
7560.
income and negative earned capital.
Negative 7560, good answers. Which my earned capital is a negative 7560. Life is good. Let's check it, make sure. Yeah, you guys are good. All right, let's go to C. On the date preparing financial statement, estimated utilities expense of 1560 had been incurred, but no bill. We have to accrue for the 1560. But no bill had been received or paid. So I'm going to book it. Book it, Dano. I'm dating myself. All right, go ahead. 1560. Where do we put the 1560? Well, okay, there's some obvious here. I got to put 1560 in expenses here. The negative or positive expense?
Positive.
1560. And I got 1560 negative. And I have a negative 1560, you know that. All that from one little number. Now it's saying liabilities. What the heck, which liability am I affecting here?
Well, you're liable to pay that bill that you have of 1560.
That's an obligation. It's a payable, right?
Yes.
So it's either accounts payable, utilities payable. So I've got a positive or negative.
That is a positive.
So I'm going to record 1560. One liability going up. I have one earned capital going down. Am I going to be in balance? I think so. Double check that. Ding, ding, ding. Good job. All right, D, on the first day of the current period, rent for 4 periods paid was recorded 11.2. Increased prepaid rent and 11.2 decrease in cash. On the first day of the current period. Now, is this a monthly? Let's see, first day of the current period. Rent for 4 periods was paid, recorded. So are we going to have to do 1 month's worth? Well, I guess it's all, you tell me, are we going to do all 11,200?
It'll be, wouldn't it be 11.2 by 4? And that will give you, well, first thing, it'll be a non-cash asset because it's prepaid expense of 11.2, right?
Okay, non-cash asset. We booked it originally as prepaid 11.2. Now we're going to put a negative in there. We're using it up.
We're using all of it?
That's the question. Are we using?
No, it's just 11.2 is what we prepaid, and then we'll break it down over the course of 4 months. And every month that we use it, we'll expense it.
So what we had,
Oh, my bad, for me.
so we're gonna go in, I'm gonna make another T account for our prepaid account. So I'm gonna go in and say, oh, I have a prepaid rent. So you're right, we put 11.2 here. And our prepaid rent is gonna go down by one quarter. How much is that?
28. 2,800, I'm sorry.
2,800. So I'm gonna end up with 8,600 maybe? No, 84.
8,400.
Good answer. Not 60, but 0. Okay. So I'm gonna go in here. I'm gonna go ahead and stop here. Take care of my prepaid of how much?
It's 11.2.
Started at 11.2. That it's not asking me when I made the cash transaction. It's asking me what the adjustment is.
No, so
8,400.
8,400 now.
So that's my ending balance. Remember when we did supplies? We started with the beginning of supplies. We know what our ending supplies are, but we needed to figure out how much in supplies.
The 28.
Does everybody see that?
Yes.
$2,800 in expense going down. Or going in. We have a negative 2,800 impact here. And we have a negative 2,800 here. So the
Yes.
question is, what happened to our non-cash assets? Well, we have prepaid expenses of 11.2. We're adjusting it by how much?
2,800
Up
So
or
it's
down?
Down.
down.
Down. So let's try that. Negative 2,800.
So presumably somewhere else on this sheet earlier, when we prepaid the 11.2, we had just prepaid it up front. Now we're in the first month of utilizing it. Now we have to adjust. So this is the 28 coming off.
You got it right.
Okay.
Okay.
Now, would
So
that prepaid have been in the previous year or?
well, this happened on the first of the month. It's on the first day of the current period, January
Okay,
1st.
got it. Okay.
Yeah, it tells you when you paid it, and it was recorded as a transaction. We're doing assessing financial statement effects of adjustments.
Right.
So
Yes, sir.
we're just doing the adjustments here. We're not taking into account, and I think I said, yeah. there you go. So let's check that, see if, good job. Okay, 3 to go. We're on track. You guys are doing well. So let's look at E. 9 months ago, sold a 1-year policy to a customer and recorded the receipt of the premium by crediting unearned revenue 2496. And adjustment had been prepared. No adjustment had been prepared. Okay, so we're going to go ahead and take a look at how much we need to adjust. So 9 months ago, sold a 1-year policy. So how much a month is that
$624.
per month? Well, if we divide by
Yes, sir.
12,
Oh, per month. Okay, I thought it said quarter.
well, now I want to calculate per month and then I'm gonna multiply by
2496 divided by 12, 208 a month.
208. Okay, so if we're 208, and so we're gonna go in put it in here, 208 a month. That was the 2496 divided by 12, right?
Yes, sir.
Now, the question is, 9 months
At the
ago,
nine, yeah, the
Yeah,
9 month
9
period,
months,
we have to,
we have 3
determine-
quarters. We have to count for 9 months of use of the policy that is going from unearned to earned. So our T account, let's look at the picture. We're gonna look at our T account. And we started with unearned revenue. Is that unearned revenue? Is that on the left side or the right side?
To be honest, was a left side, if this is an asset.
Well, on the left side, we have prepaid expenses. On the right side, we have unearned revenue. It's a liability, right? The insurance company got the cash
Oh, this is not us paying, this is
2496,
them. This is
and they
the,
have a liability of 2496. If the customer canceled it tomorrow, they owe the money, got to write the check.
so it'll be on the right one.
Better be unearned revenues over here on the right. So we'll look at the unearned revenue account. We're going to start with the 2496. They haven't recorded anything yet. So they're going to have to take care of 9 months, 3 quarters, 369, of the transaction. So what's 9 times 208?
1872.
1872.
1872, which leaves 496.
624, I believe.
Very good. So we're looking at that saying, well, do we put the 624 or the 672 or the, I'm sorry,
1872.
yeah, 1872.
Should be the 1872, right? Because that's what we,
That's
or
that's what
adjusting.
we used up. That's what we're gonna recognize. That's what the customer had a prepaid expense and then they made it into insurance expense.
Mhm.
We've got an unearned revenue and we're making it into an earned revenue. So I'm gonna go ahead and put the 1872 where? You said revenue,
right.
which yields my net income is positive or negative?
Positive,
Would be positive.
Yep. Are you positive?
positive.
Good, good. You should be. And we have earned capital is also positive. And what else is going on here?
You subtract it from the liabilities from the.
Yeah, we started 2496. We're gonna subtract the 1872.
Yep. So negative 1872.
Is that a negative or a positive?
Negative.
It should be a negative because we've got 0 on the left side, so we have to have 0 on the right side, correct?
Yep. Are you sure?
Positive.
Yeah.
Good to go. Yep, thank
Well, I
you.
mean, that's what you've been telling us this whole time, so I'm gonna go with it.
Well, if I've been telling you, you believe me, that's good. Thank you. All right, let's go check it, see if we're good. Bingo, well done. Okay. I am going to, I want to talk a little bit more about G when we get to it, about interest, but let's go ahead and go on to wages that we have to accrue. We have to estimate. We have to figure out exactly. We're not paying the wages yet. No cash is changing hands, but the employees earned it. And we need to put it on the books for the right time period. So what's it tell me? At the end of the period, employee wages 3860 have been incurred, but not yet paid. So how does that show up?
It's gonna show up as a liability for a moment.
Yeah,
And-
liability of 3860 positive,
Yes,
and then
What's
negative
what's
on
the
the
liability called?
Unpaid, not
Wage-
salary.
Is it a receivable or payable?
Unpayable.
Payable.
Payable. We owe the money, so it's wages payable, or salaries payable, or earnings payable, whatever you want to call it, but it's payable. Okay, the same way you might have receivables and sales that you haven't recorded or billed yet. It's going to be a receivable. But this is a payable to our employees. We owe them the money. It's a liability. It's a positive obligation. Where else do we put it? Revenue or expenses?
Expense.
It's an expense.
It is, you're right. 3860. How does that impact net income?
Negative 3860.
Negative 3860. And how does that impact earned capital?
Negative 3860.
Down she goes. So I got a liability that's up and an equity that's down, and I'm in balance. Let's double check it. We're good to go.
So since we've already recorded this, and now let's say we actually pay the employees, does it become
I love that question.
negative 3,800 on liabilities?
All right, let's do some, that's a great question. Let's do some analysis here. Let me go draw some pictures. I like my accountants like T accounts, and I like my T accounts. So I'm going to draw a couple of T accounts here. So I'm going to have my wages payable. So you know what, I'm going to make it so it's readable rather than scribble. Okay, so I'm going to T account called wages payable. And I'm going to have a T account called wage expense. I'm going to have another T account called cash. And I'm going to draw some inference here, wage expense, cash, wages payable. Finish the wording here, so it's crystal clear. So what did we do? We went ahead and at the end of the year, we put 3860 as a payable. And then we put 3860 as wage expense. All right. Any cash change hands?
No.
Nope. It's adjusting entry. We don't do any cash. Let's say 2 weeks later, we pay monthly payroll. This is our salary for our managers that get paid every month. They get a bonus in between, whatever it might be. So I'm saying, and I'm gonna change these numbers to make it a little bit more readable. I'm gonna change that to 4,000, just so we can do the numbers and math, not to get confused by the number. So I'm gonna go in here and say, I got $4,000 here, $4,000 here. So what happens? 2 weeks later, I've got another 2,000 that I have to pay my employees. I'm going to be paying them $6,000 cash. And you're going to say to me, well, my wage here, that's interesting. At the end of the year, I've still got the payable for 4,000, but what happens to my wage expense? The temporary account called wage expense. What does it start out as at the first of the year?
Zero.
Zip. Great. Starts out at zero. So what's going to happen? I'm going to go in and say, oh, you know what? How much in wage expense do I have in the current year? I don't have 4,000. I'm writing a check for 6,000. I'm going to clear my 4,000 here. And I'm going to go ahead and incur how much wage expense in the current year?
2,000.
Out of that 6, there's only 2,000 in wage expense. So how would this look over here? I mean, obviously this is not on the problem, but I have cash going down -6. I don't have any other assets being affected. I have my accounts payable. When I write this check, going up $4,000. I mean, going down 4,000. I had a 4,000 balance. I have a -4 over here in liabilities. And once I go through the rest of this transaction stuff, I'm going to have
-2 at earned capital.
I'm gonna have -2 in capital. How do I get -2? Let's do the expenses first. I have
Okay,
2
sorry.
expenses. I have an income of -2. And I have contributed capital, I'm sorry, earned capital, not contributed, because this is from operations. I have -2. Am I in balance?
Yes.
Sure
Sure.
enough, I have -6 in cash. I have negative, and that's my total assets, -4 and -2 in liabilities and equity. And I happen to have 2 and -2 in expenses net income. So we're good. But I like the question because you're saying, do I have 6,000 expenses this year? No, I only have 2,000 expenses. I already recorded 4,000 expenses for my employees last year. I got 2,000 more that needs to be recorded, and that's accurately reflected here. Does that make sense?
Yeah, you just took my original question and Bruce bannered it, but yeah, I got it now.
Okay, yeah, well, just for clarity, better to say too much than too little, I guess. But and again, I appreciate your indulgence.
So
All right,
I got
let's-
a question,
Sure.
just to clarify for me. So earned capital is all operationals, operational
I'll
charges
operate.
or costs, right?
It's
And
what
then,
the company earned from doing business,
Right,
not what
and
was
then-
given to them by investors.
right, but contributed is investors.
And
Okay,
that
got it.
contributed capital can be debt like bonds, that's an investment, or it could be equity. like
Loans.
stock.
Okay.
And what I'll make.
The liabilities would be loans.
The bonds payable is liability. Well, liabilities can be loans. But yeah, accounts payable, bonds payable, liabilities.
Yep.
And
Okay.
contributed capital is ownership interest. Yes, it's.
All right, thank you.
It's equity, correct.
Yes, sir.
But on the financing section of a cash flow statement, long-term liabilities and equity are considered financing. So we're gonna get to that when we get to cash flow. But I'm
Oh,
not trying to confuse you.
Can't
But I
wait.
want to make sure, it sounds confusing as it is, but you're right, bonds payable, liability, contributed capital, with contributed equity, contributed investment. But on a cash flow statement, that debt is also considered investment. So I want to differentiate that because you're going to see that again. Again, you're going to hear this 6 times or 8 times and read it 6 more times. You'll internalize this, so get comfortable. All right, let's go take a look at the last set of transactions, and then I want to make a comment about interest rates. At the end of the period, 1,200 of interest has been earned but not yet received or recorded. Okay, so I've earned it. So there might be a note. I gave some money to somebody and they're paying me back after the year end. It's like wages. Okay, wages were incurred. Interest expense was incurred by whoever I gave the money. I've got interest revenue on my books. ABC borrowed the money, XYZ loaned them the money. So I have I have an asset on the book saying, pay me, please. But I'm also going to need to recognize some revenue in the meantime. So we've got $1,200 of interest that we've earned. We don't send a bill for it. It's like a 90-day note. It's, December 1, 90-day note. We're going to register December's interest there. And January, February, then of February, we're going to get the principal plus the total interest. So let me look at that. How much is going on my books? Do they owe me money? Or do I owe somebody money for the $1,200 interest that I earned?
If someone owes you money,
Someone owes me money. What's that called?
interest. Oh, accounts receivable,
It's let's make it interest receivable.
interest
Accounts
receivable.
is usually trade receivables, customers. Probably unless you're a bank, interest is not a receivable, but it is. Interest is a receivable. It's not accounts receivable. So I get interest receivable. What happened to my assets? Up or down? Non-cash assets.
Up
By how much?
1,200.
$1,200. What's the other side of the transaction? Is it a 1,200 expense or a 1,200 revenue?
It's revenue.
Yep, I get revenue owed to me. And I earned it during the month of December, or whatever it was. Positive or negative net income?
Positive.
Positive or negative earned capital?
Same positive.
You sure?
Yeah, let's write it.
Everybody sure? Good answers. Well done. Well said. I do want to make one byline when it comes to interest rates, and this is a sneak preview, but it's important to realize when someone says, and I'm gonna do a whiteboard here right now. When someone says, out, if I have a 12% 90-day note for $10,000. Is that an annual interest rate, a 90-day interest rate, or a 5-year interest rate?
I would say it's a 90-day.
I'm getting a vote for 90-day. Lee, what do you think?
Annual.
Annual. And Lee? If you're still there? Or we're tied, 90-day and one and annual.
Can you hear me?
Yes, now I can hear you. Yes,
Oh,
Lee.
yeah, I'm gonna, oh my gosh.
Yeah, you gotta make it.
Yeah, I'm gonna say 90-day. I mean, I could see where you'd say annual, but yeah, I mean, you've got 90-day note for 10K, but
All right,
yeah.
let me ask you a question. If I told you my daughter just bought a house in Baltimore for her first house, 5.25% interest rate. If she got a 5.25% interest rate for 30 years, is that 5.25 a year or 5.25 over 30 years?
Well, that's the interest rate over the time, I mean, the life of the loan.
Is that so 5% over the whole life of the loan or 5.25 per year over the life of the loan?
It will be 5.5% over the, per quarter, I guess, over the life of the loan, because you pay all your interest up front.
Well, it's heavier weighted interest and principal, because you're right, every payment's part interest, part principal. In the early years, it's mostly interest. In the later years, it's mostly principal. But the question I'm getting at, if you take out a loan, a 30-year loan, that's not 5% one time calculated, spread over 30 years. It's 5%, 5.25 per year.
Mm.
You got a 5-year car loan at 4%, or a 3-year car loan at 4%, or a 7-year, God forbid. Don't do it at 4%. Is that 4% a year, or is that 4% over the life of the loan?
Over the life of the loan. But isn't there a balloon payment as well?
Nope, not on a car loan. Car loan, just, it's like a mortgage, 15-year, 30-year. It is an annual interest rate. 4% a year.
Mm.
So if you got a 3-year loan, at the end of the year, you paid a bunch of interest, you paid a bunch of principal, and all those payments are not just principal.
Yeah.
If I make a $500 payment on a loan after 1 month, after a $10,000 loan, that does not mean my balance on my loan is 9,500. The principal balance on the loan is probably 96 something, and the interest paid was 3 something, or whatever it might be on that one payment. You say, oh, I got money, I'm gonna pay it off after 1 month. You're gonna pay, the interest is going to be what you paid with the payment, and the principal will get deducted off the loan. So short answer is, this is an annual rate. So if I told you I had a 90-day note for $10,000, what are you going to be paid 3 months from now? Well, let's do that. Math is easy. 10% of 10,000 is 1,000. 1% is 100. So at the end of 90 days, I'm going to get paid 10,300. Not 12% of the 10,000, not 11,200. So be real careful with this. And I'm going to reemphasize it, because this is obviously a support call or an extra help call. But when we get to bonds, when we get to notes, when we look at liabilities, we need to be aware that interest rates are quote as an annual basis. So our adjusting entry after 1 month, let's say this was a 12/1 issued 90-day note. No, we already got 90-day note. Okay, so at the end of December, we got $100 interest. Either due, we're giving the loan, or payable. if we are consuming the loan, if we took out the loan, got the money from somebody else. So I guess the point here, I just wanted to point out, and again, we'll talk more about this. Rates are quoted on an annual basis. You see this in finance, even economics, but definitely in accounting. These are annual interest rates, not spread over. It's not just 90-day interest rate, because it'd be too confusing, because this is a 12% 180-day note, a 12% 90-day note, a 12% 270-day note, a 12% 3-year note, a 12% 10-year bond. Whatever it is, it's still an annual rate. Is that clear? Are we making sense with that? It's kind of confusing when you first hear it and you're trying to internalize it and say, oh, it says right there, 90 days, 12%. But if you think about it that way, you lose. Normally, a problem will say 12% annual rate at this stage. But if it doesn't say 12% annual rate, it is an annual rate. I just want to get you clear on that. I'm going to go ahead and stop the recording and just make it so that if you have other questions, any other questions that you want on the recording. Hearing none.